Alright, let's take a look again at market trends. Here's gold, talking about this forever. This week closes right inside the balance zone, while the last couple of weeks, the last 2 weeks, were actually showing that they want to go to the upper border, to the green line of the balance zone. This week is coming into the middle of it. When we take a look at the daily chart, we can see that the previous demand zone is being hit again. When you take a look at this area here, that's where your demand is, and we have traded below it right here, and now we're closing below it. Let's see if we can really break to the downside, establishing some continuous movement to that place. I kind of doubt that, since we are in an uptrend on the weekly. Please remember, the monthly chart is also moving above the balance zone, which means we are up. This has been the previous uptrend, that's your correction, and now we are moving up. We're still waiting for our fractal at that point. It would be created at the end of September, so we do need some slower markets. However, the rule is to exit as you get your fractal inside the balance zone, and that's actually what's happening this week. My stop is below that fractal. If we close there, make sure you got some distance between the low of your fractal low and where your stop actually is. It is in this case the low at 1302. You should be well below $1,300 on gold for your stop, so you can give this market a chance to still go a little bit lower, penetrating that red line and then moving out. Hopefully that is what we'll see. Same is true for silver. We just have to wait and see it pan out. It's never comfortable trading these trends, since most of the time they will simply be going nowhere and even against you, and we have this happening here right now. We kind of know that there is this uptrend going on the monthly. We have this fractal now in the balance zone on the weekly, which is a pretty good exit for the long term. Still, it doesn't mean that it cannot get hit. It might as well be hit, and then the market turns around. We don't know. That's why it's so important that you have your risk management in place, since you might actually have to enter your positions 1, 2, maybe even 3 times until that trend actually starts going. Before that, it's possible that you are stopped out, that there will be no success in the trade, even though the overall direction is correct. You do have to have a stop out place. Anything else would be too risky if you just trade without a stop, only basing your long position in gold on your belief that it's going up. We might still be wrong on this. It is not going up, but that is not what we see in the charts right now. It may occur as prices are coming much lower and then continuing lower on that weekly, even though right now I don't see that happening. The fractal inside the balance zone as an important point for a stop is also or can be seen in the British pound pairs. You get your what could be the fractal high inside the balance zone for the first time since the breakout occurred in the British pound Australian. If you just move your or mark that breakout level right there, and let's talk about this in a second, and you get your breakout, it's successful. Now price looks for that balance a little bit. We penetrate the balance zone, but we close much lower. We might as well continue to the downside here, getting a fractal, which would mean that our stop is there as well. The monthly chart, just to remind you, is way down, and we do have no reason to assume that it cannot reach this area here at around 143. Holding on to the position until the fractal stop is hit inside the balance zone. Until then, we don't really care how the candle looks or what the candle looks like, how the market is moving. We'll just follow it, and as long as it is staying below the balance zone in this case, we'll continue to trade it to the downside. If you take a look at the US indices, they're pretty great. We have a complete bounce from last week's lows. This low here in the Nasdaq at around 4675, just on the upper border of the balance zone has been rejected. We are trading right there near the all-time highs. This is simply a long, and it continues to be a long. If you mark your breakout right there, you get your new all-time high at that point, and we're closing the week above it. It had been sideways over here, but if you just follow the market, you're in profit right now, and who knows where this thing is going. Let me just remind you that there is a divergence coming up, some sort of a divergence coming up in the indicator. This trend has been a very long trend for many years, and now we're continuing higher. We don't know how much steam there's left. We'll still need at least until the end of the year to judge how far this AO, this momentum indicator, will be able to move to the upside. And this, of course, will only be happening because of prices moving that much higher. And that's what we are waiting for, that we just follow the market, but we don't know after this long trend if we really see that much steam, that much momentum in the trade continuing to the upside. At some point it will slow down, at some point the longs will not be working anymore before the market turns into a major correction. We don't know if this is the point right now that this will happen. Maybe this will never really say goodbye to that level, because it keeps coming back, creating that fractal inside the balance zone, hitting it, and then stopping us out with not too much profits here. But we don't know. This week looks pretty good so far. 1 week doesn't mean anything. We'll just follow the overall market movement. Let me really quickly come back to the British Pound Australian, because I kind of forgot to show you the internal price action here on the daily chart. If you take a look at that level, it's of course marked by a fractal here. That's the high of the internal correction, marked by the indicator not crossing the zero line. And now in the major correction here, the indicator showing you a cross above the zero line in the major correction, you get the high exactly at the same point than the high of the minor previous correction. We have a high in there at 177.87, and here we are at 178.01. So we're talking about not even 15 pips. It's 14 pips or something like that. And how could it be more perfect than that? This week, or this day, actually showed us a rejection of that level very clearly, and we were most likely following the overall trend. Now, of course, this has been in correction for 4 weeks. That's a long time. If you are kind of impatient and you want to have this get going right away, this approach might not be for you. You'd really have to wait it out. It's a process. It's not something that happens within 5 minutes. So you just gotta wait for it. And lastly, we are taking a look at the euro dollar, which is closing the week lower. Week looks exactly like the previous one, even though that previous one had a higher close than the open. This week is the opposite. The fractal stop is still active. The short is still active. The breakout was right below here. We have been kind of trapped inside that movement here, that it didn't really go down. It did that in the first 4 weeks, but it hasn't done it ever since. Let's see if there's any meaning to this. Right now we're trading right on top of the balance zone, exactly where the price wants to be. We really don't have any reason to assume it's going to continue down next week. We also don't have any reason to assume it's going to go up next week. Let's just see if that breakout to the downside will happen. So far we are not stopped out. We are still following the overall market trend, which is the monthly chart. You have your down move, you have your correction, only slightly trading into the balance zone. And now we might continue lower here. Let's wait and see what happens. Thanks again for watching the videos, and see you next week.